I'm Dan Fitzpatrick at StockMarketMentor.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just pushing the buy button every morning on the stocks you saw on TV last night. I'm here to help you make money on these three stocks I saw on TV. We're going to look at earnings now. CSCO reported some pretty solid earnings. The stock's up after hours. Not a huge amount, unless you call 6% huge. This is a stock that I would not be buying into the open tomorrow. A 6% gap is a pretty big gap, particularly since it's gapping right up into resistance. Now, this stock, if it gaps up and keeps running, we'll say up to here, maybe 29. Sure, the stock might be moving up even more, but I'm just saying as a function of risk management, you know, this is a stock that you wish you'd bought back here. Bought-in? Did I really say bought-in? This is a stock that you'd wish you had bought back here on the way down, and then you'd wind up selling it into the strength. So CSCO, love the fact that they're making money, love the fact that they beat, but it's not a trading opportunity. Frankly, it's probably a pretty good shorting opportunity, 59-minute trading opportunity here. So that's all I think about that. Now, Salesforce, we'll get some charts here in a second. Okay, this is a similar dynamic. They reported strong earnings, stocks up after hours, about 6%. I believe this is an all-time high. So it's gapped up to an all-time high. This is another one where I wouldn't be buying it at the open because it's a 6% gap up at an all-time high, kind of a jiggy market here. Maybe you'll make a buck or two if you do, but I would instead watch and see how it opens. If you're long the stock, frankly, I'd be selling into strength. And I like Salesforce. I'm just looking at this pattern here. This is a risky stock to buy. See, on these three stocks I saw on TV, I'm helping you make money basically by keeping you out of trades. Great, thanks, Dan. Okay, then L Brands. This is a different deal. Okay, they remember back here they reported, I think it was their same store sales, although I don't remember, but they released something, it wasn't earnings, that essentially said, you know, things are stinking up the joint and they're not getting any better. So the stock gapped down, sold off, continued to sell. So now they report earnings, and guess what? They were bad. So now the stock really trades down. Believe it or not, this is the one out of CSCO, Salesforce, or L Brands. This is one that I would be looking to buy at the open tomorrow or close to it. You want to make sure that the stock is trading above wherever the opening print was. But when this stock, and you know, we could probably see some more downgrades tomorrow from some of the penguins who should have been downgrading it before. But at some point, this stock's going to be done going down, and it's going to at least give you a little trade. So you buy the stock after the open, and then as long as the stock's trading above the opening print, you're pretty good to go, I think. We look at 3 standard deviations. That's clear down here. So it won't be that extended based on this chart. It's a chart that I look at for super extended stocks, but you probably get a little bit of a rebound tomorrow. Just use stops. Always important to know exactly how much money you're willing to lose on the trade. If you don't know what that amount is, then you should not be making that trade. Okay, I'm Dan Fitzpatrick at Stock Market Mentor. I'll see you next time.